Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and I'll be hosting this live webinar. We'll take a look at the Forex market together. Before we do that, though, and look at the actual charts, we have this presentation to go through together. First of all, explaining the fact that this webinar is intended for a global audience and may not be suitable for everyone. To find out more information on that, conditions, and other details, please take a look at this link, select your country of residence, and then contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for everyone. Please find out more information on that by seeking advice of an independent financial advisor. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer. So today we are going to take a look at Forex trading as we do always on these Tuesdays and Wednesdays mornings. And our focus today is going to be Fibonacci and Wave. So if you are here regularly, then you probably have already seen a webinar on this topic. But if you're maybe joining specifically for this particular theme, then let me know, and I will give you perhaps a bit more introduction and background information than perhaps usual. But it's just good for me to know if anyone is joining for the first time on this Fib and Wave focus. Fibonacci, we can use for retracements, for targets, for entries, for filters, and but not for trend, for instance. Right? So it's very good to use in a trending environment, not so good to be used in a ranging environment. And that has everything to do with the psychology of the market, because if there's a trend going on, we're looking to step in at discounts. If there's a range, then we're basically cautious with the fib levels, because price is retesting tops and bottoms more than anything, and maybe even breaking them. So it's a different type of environment. Fibs work best in a trending environment. Waves basically indicate the momentum and correction, and they try to label them like a jigsaw puzzle. The advantage of doing that is that you're trying to understand what the current and next pieces of the puzzle could be. Wave analysis, you can do it on various degrees of difficulty. One would be a very precise, detailed count, wave count. One other way would be a more looser approach that basically tries to understand the market structure and tries to give a bit of more, let's say, simpler approach to tackling it. I think that there's nothing wrong with both. But I think that many traders start out with a focus on having an exact wave count, and I don't think that's the best approach. Best is to start slow, use it as a support, use it just to get a general feeling, and just to get an idea of momentum correction and stuff like that before one dives into using the wave count very rigorously and seriously for your own trading, and making wave counts that are overly precise perhaps in some cases. Wave counts can be still very useful if you just keep it as a general idea, right? Or a general concept. What I mean with that is, for instance, we have four environments. Market can either be impulsive of correction, or it can be bullish or bearish. So as long as we know that this was a bullish impulse followed by a bearish correction, right? And I'll draw that for you. Bullish momentum, bearish correction. Then, considering all other factors, forgetting all other factors, like perhaps that there's a bigger downtrend in this chart, a bullish momentum could be very logical after that. So as long as we know that we had a bullish momentum and we're in a bearish correction now, we can understand that the next step could be a bullish momentum. Whether we label this 1, A, C, 3, whatever, 1 of 3, 3 of 1, to a certain degree is less relevant than the fact that we're labeling impulse and correction. Of course, it's even more useful to know that this is perhaps wave 1, because then we know that there could be a wave 3 after that, which is could help us with setting up a target that is further away, because wave 3s tend to be bigger, for instance. That information is useful. But if we get into too much of a detail, at the beginning at least, then you might confuse and get annoyed by wave counts. And it's better to take it gradual, step by step, and let your analysis be proved correctly by the market. And I think that's why many step away from wave analysis, because it's too discretionary and it's too difficult to implement in real life. But if you take it step by step and build the experience with it as you go along, I think it will go easier. I think wave analysis is also, last but not least, good to look into these 3 points. For instance, is there a trend, opportunity, filters? Wave analysis can help that. For precise trading decisions, like trigger and entry method, I prefer fibs or price action. So in that regard, waves and fibs fit neatly because they kind of help support each other. Alrighty, that's a general introduction. Let's get started and take a look at, first of all, news. We know that the Aussie had a release of its interest rate statement. And we see that, well, we don't see it here, but let me refresh it. But the interest rate did go down to, oh, it's a statement, sorry, that's why, from 2.25 to 2%, following some weakness perhaps in the Australian economy. It's showing some signs of struggle, so they're probably trying to prevent that and weakening and loosening the monetary policy here. So Australian interest rate will be compensated less by holding it. Could mean less demand for the Australian dollar, let's see. But the decrease did happen. And otherwise today, dollar ISM news, what else do we have? Pound news, we have construction PMI. And later this Friday, of course, we have NFP. Alrighty, let me grab my charts. Alrighty, do you see my euro dollar chart now at the moment? Visual and audio okay? Great. If you want the presentation, please just send me an email. If you are interested in an indicator or a presentation, or you would like to have any follow-up questions on any of the wave analysis or fibs, just send me an email, all right, with the topic, and I'll get back to you. Alrighty, so we're looking at the euro dollar kind of plain chart, only fractals and awesome oscillator added, and we are getting a retracement that is, from a fib and wave point of view, expected, because, and this is something I already said beforehand, is that we should expect the price to go up to the 23.6 fib of this leg, roughly speaking, because this is the wave 3 most likely. Why is this the wave 3? Because if we look at the daily analysis here so far, this is probably a wave 1, 2, and we've had a very big wave 3. And carefully and slowly we started to say, okay, wave 3 is probably going to be finishing, or there's a chance that it could finish, because we're seeing substantial price action not breaking the low. And therefore, when enough candles don't break that low, the impulse of wave 3 is then can be considered finished, and we're most likely in that wave 4. The rule I use is 5 to 6 candles. We've had 1, 2, 3, 4, 5, 6. This is the 7th candle actually last week. It was already the week before and the week therefore 2 weeks ago already clear that we had a bullish candle not breaking this low, and we've had upside ever since and broke the high. So to me, this is a wave 4. So if we put a fib on the wave 3, we want to see where that wave 4 potentially could stop. Now, are we 100% sure it's a wave 4? No, we never ever know 100%, but I would say it's 80% decency, which is probably the highest you'll ever get. to be honest, in real life, or maybe 90%. In practical terms, it's difficult to get higher than that. So I'm as sure as I can be, basically, that it is a wave 4. Let me say it this way. More certainty is just not possible in the marketplace, right? In my humble opinion, it is a wave 4, and we should expect resistance at 23.6 or the 38.2 fib, from this wave point of view. Why is that? Because if we look at the monthly chart, basically, we're looking at an ABC correction here, and that C wave can continue because there's still a 4 and 5 left, like that. And the B wave, as you can see, was a long, drawn-out consolidation here. Recently, or not that recently, but maybe 1.5 years ago, we had this rising wedge within B, right, like that, and we had actually a triangle like this, A, B, C, D, and we had the E part, actually, of B finishing at that point, like this. All right, so this is what we're finishing on the euro dollar. After that, we'll have to see. For the moment, we still have the 4 and 5 left of C. Afterwards, the C will maybe be completed. Who knows? We'll talk about that later on. So from that point of view, a wave 4 could end at the 23.6, but typically more the 38.2 is used. So I would say at the moment we can assume that price has space up to the 38.2, but it doesn't mean that the 23.6 will not be respected. The market will not stop and retrace from that level, right? Everything moves in waves. So we have, and this is something I think we mentioned 2 weeks ago, we'll probably see move up to 23.6, then a retracement, and then up to 38.2, right? So from that point of view, we're kind of getting that pattern at the moment. Still early, but it does seem to be so. We did push a bit above the 23.6, but from a weekly point of view, that wick is, as you can see, very small. Those small punches through fibs can happen. Sometimes it's very precise to the pip. Sometimes you'll get a few pips pierced through a level like that. From a 1-minute chart, this could, of course, be a big break. From a weekly chart, it is small. So for the moment, if we look at just like price action candlestick patterns, we had, of course, Friday or Thursday, the closure of the May candle. And you see that was a bullish candle engulfing more or less almost the month of March. So that's a strong bullish candle. It closed near the high. And it's the first bullish candle in 10 months or almost a year. Obviously, it's a clear price action signal that is interesting, and we must be aware of that the euro dollar could be retracing or at least stalling here with a strong bullish candle like that. And we see that strong monthly candle translated in bullish weekly candles. All right. So for the moment, I'm considering the last week's low at 108.20 to be important, and we could see a retracement of last week's candle before we continue up to the 38.2 fib. Now we can also put the fib from here. Actually, let's just for the moment, I would just fib the weekly candle. You can also use this bottom. In fact, we'll take a look at that in a second. Daily candle, daily chart. Sorry, we're looking for a retracement. You see, if you look at the fractals, we have key bottoms and tops. We had a key top here at 110.50. We broke through that, so we have a higher high at the moment. We have higher highs and higher lows. So maybe at this point, if you look at the daily chart, that weekly fib doesn't look too neat. We can use this bottom on the daily chart and squeeze the fib in a bit more logical swing high, swing low. And basically, these fibs will act as support, in my opinion, for upside. Now, as I said, fibs are important for trends, and I wouldn't say we have a very strong uptrend, but I would say we have enough kind of clues and information to say that an upside is decently probable to put a fib on that upside and target the minus 618 target. And when we look at the target, the minus 618 target, what do we see? We see that the 38.2 fib, right, is right at that level. Same level at 117 roughly, 116.80. So we got confluence between the main target and the 38.2 fib, which then of course would be a strong resistance spot. So logically, I think what you can derive from this is that you got a few ideas for trades. First of all was the longs we were talking about last week, right? I'm talking about the past now. Then the shorts from this zone, right? Now we're talking about, I'm looking at longs from the fibs, followed by more longs at dips probably, maybe one, not too many, there's not a ton of space, maybe two, right? Followed by potential early shorts at the target there, and then again shorts on rallies, because then we're in a bearish environment. This is kind of gives you, I think, or gives myself at least, a general feeling for a trading plan that I would find interesting, that goes along with my market sentiment at the moment. That does not necessarily mean I'm jumping in trades necessarily based on wave analysis, but it gives me a general idea about how I want to tackle it, and then I look at tools and indicators of lower time frames. If I see confirmations and I see setups, if I see rejections that or direct pending orders or market orders that make sense, right? Based on a variety of tools that we discussed in other webinars, like trend lines, Camarilla, moving averages. For the moment, we are aiming for the 38.2 fib. That's the next target, in fact, at 110.50. Now, the 38.2 fib doesn't have to be the bouncing spot. It doesn't have to mean that the price will necessarily turn at that level and start rising forever, but it could. It could also retrace deeper. And this is kind of the game that is always really present with on fibs. Which fib will be used? Will it retrace deeper? And it's an interesting game. It could be annoying at the beginning. It's basically a game where there are potential intraday shorts in this case to those fib levels, but potentially longs at any of these fibs for swing trades. So it depends how eager you are. If you want to, if you like the longs, you could even trade at the 38.2 fib, but realize that there's a chance they will retrace deeper. In this case, as long as the stop loss is below the 78.6 probably, or the bottom, or the weekly candle low, the stop loss should be survivable, right? If you would rather kind of be patient and shop for a better entry, that would make sense too, and you just wait for price to get to the 50 or 61.8 fib. If that doesn't happen and we bounce off the 38.2 fib, right, we have to look in lower time frames and look for breaks on lower time frames to catch it at around here when it starts to break out to the upside. That will be the alternative, because the shallow fibs have a bigger stop loss, of course, so not equally appealing to all traders. Then the breakout will be the alternative. So from that point of view, let's take a look at price action just to reinforce the fact that daily candles are important. We got one bullish candle after another, right? And then that Friday we see a doji and downside after that. Or in other words, in 4-hour chart, if you look at simply at price action, right? Just look at follow price and the flow of price, right? What do we see? The candles, big blue candles, closes near the high. We see small bearish candles, and the majority are blue. Clearly bullish momentum. Those are the characteristics of bullish momentum. From a reversal point of view, the first clear signal that there is a potential problem with that upside is this candle, right? Because it had a doji before that, and it's a strong candle, and engulfs D1 before that. All right, and after that, we broke this low, and we're having already a lower low after breaking this bottom. So for me, besides looking for longs here and for shorts at the 38.2 fib, there is a potential to look for shorts from an intraday perspective down to those fibs. That will be the additional idea on lower time frames that we now bump into, because we are now at the moment in a bearish mode, and we do have some space until we reach that fib. We got a strong 1 hour candle. It's not that maybe important, but we're getting the follow through. We're getting indeed the turnover, the rollover here that we were expecting. Indeed, it happened. AO reaches a top point, starts to decline. Especially important is 3 bars. 3 bars. The first time it hits 3 red bars, according to the creator of this indicator, Bill Williams. So keep that in mind. When you see this topping out here, don't anticipate the reversal too soon, because you got 1 red bar here. You see the oscillator showing a red bar here already. That's on the soon too early side, as you can see, because it made 1 more push up. 3 red bars is here, right? And that's where we already had that big downside candle. So you get all kind of confluence showing that indeed we're topping out here. We had a rising wedge formation as well, right? Like this. All right. So that was the end of that upside. We were talking about upside on Tuesday. Wednesday I was a bit skeptical if it could continue. It still did, but then eventually it did top out and is now reversing. So this reversal, I think, will continue. And let's talk now about potential entries to that downside. Let me, before I continue, take a look. I know I'm going maybe in great detail about the $0. So I hope you don't mind. Normally I go a bit faster, but I thought it's worth it. It's the beginning of the month to look at all angles. Let me just take a look at a question or two. Let's see. Chris, is the B on the bigger wave, the one you drew in green, at the lowest low, because the other lows, let's see, part of the smaller wave you drew in blue didn't make a lower low from the bigger wave? Let's see. Oh, I think you're talking about the monthly chart, right, Greg? Greg, are you talking about the monthly? Oh, okay. Let's see. The bigger wave at the lowest low, because the other lows, weekly and monthly. Yeah, I got it. Let's see. Let's take a look at the monthly. We are looking at, yes, I'm looking at the green. I remember A, B, C, indeed. Let's see. Didn't make a lower low from the bigger wave. The B is at this point here, right? You mentioned lowest low. So you meant the C wave. Why is it lower? The C wave is lower because the ABC is a impulsive correction, also called zigzag. And in that case, the correction goes deeper. It makes a C that goes beyond A, then goes further than A. Sometimes, indeed, the correction doesn't go further, and we get a contracting wedge, and or just a correction that's flat, for instance. We call it WXY in that case, and it would be this potential like that, right? It would look like this, roughly equal to each other here. Contracting wedge would be when the formation is like that, and we would have, for instance, a WXYXZ like that. So there are different types of corrections. I'm not sure if I answered your question, but I hope I did. Regarding the wave analysis, by the way, we'll dive into the lower time frames in a second. But before I do that, I just wanted to show you the fact that you can look at wave analysis that I post every day. Go to the website, go to analytics, go to wave analysis, and you'll find anywhere around 5 a.m., 6 a.m., 7 a.m. UK time, anywhere between 5 and 7. You will find my wave analysis. And basically what we see today here, for instance, is indeed, and I was already hinting about that earlier, is that we're getting at the end of the wave somewhere here, right? And indeed, we're seeing reaction to that. So if you want to know the exact wave count, you can go here. I don't want to necessarily maybe bore you with that now, but ultimately what we had on the euro dollar was that bullish push up that we were talking about, impulsive waves, which was part of a wave C, an ABC, a bigger ABC, that completed a Y and Y of W. And now we're getting a more corrective to the downside. And you can see the targets here versus the fib ratios, X versus Y. Blue, the 61.8, is the main one to look at according to the typical, let's say the typical average fib that is used in such a situation. That's why it's highlighted blue. It's not always like that, don't get me wrong. It's just, let's call it the standard, but far from it that no other fib will be used. That's how the euro dollar looks like. So that's where you can find the exact count. And here I don't show it, but at the moment somehow let me go back to yesterday's count just quickly. Oh. Now I lost the page here. Anyhow, I'll load that up in a second. Oh, there it is already. Good. And you'll see that the wave 4 here is basically the bigger green wave 4, part of the bigger green wave 3. And we're basically here making a wave 3. And this is a WXY correction, WXY. And within the Y of wave 4, right, we're making, again, most likely an expansion like that. There is a slight chance that it will not happen, and we actually stop at the 23.6 and then go down from here. But that decision we will find out a bit later. Here you can see that a bit better. That decision will depend on how we bounce here and how we bounce here. And then we'll have to see which scenario really seems most likely. But for the moment, typically we will get a 38.2 fib. Right? So when you look at the wave 3 and 4, you can see wave 3, wave 4 here, and we're making this with expansion correction within the wave 4. But within that wave 4, within the W and XY, you sometimes have impulse as well. All right, and now let me go back to this chart. The smaller waves within wave C, indeed, basically, I'm looking at this. I'm looking at the daily chart, for instance. You can see that looking at the oscillator, this was one move down, and this was a move up to the zero line. Typically, what I like to do is use that awesome oscillator to have an idea about when the price retraces back, when the bars retrace back, I should say, to the zero line, that's kind of a swing high, swing low that's completed. So this is one move, and this is one move, and then this is one move. So when we then start labeling it, it could be an ABC, but because red was pushing so far, we know that this is a wave 3, so this is a 1, 2, 3. Now, here we push quite far. Sometimes we did go back to the zero line here, slightly here perhaps, not even missed it by a tad here. But ultimately, I would consider it one push down. Now, some might consider this a wave 3 and this a wave 4 and that a wave 5. But why I don't do that is because if I look at the oscillator, the wave 3 is typically the strongest. This is the strongest, a lot stronger than this one. So that's why one of the reasons I consider this total wave 3. Because if I look at the oscillator, the momentum was at the end, not at the, let's say, the beginning of the half, or at the end of the half, or just halfway maybe, right? So that's again more maybe advanced, but the awesome oscillator helps me with the wave count and shows me that this entire move down is probably part of a wave 3. Within that wave 3, we'll have again an internal wave count, right? And we see that here, this oscillator doesn't break this oscillator. So this is probably the wave 5. This is the wave 3 of 3. This is the wave 4 of 3, right? And we could probably see a wave 1 here, and perhaps here wave 2. So we have a 5-wave structure within that third wave. And then, of course, we'll again have waves within those waves, but that's not so relevant for now. Especially now that probably the wave is completed because of the fact that we've had a substantial pause here, which could indicate wave 4, finally. Because we've now have a potential for wave 4, this could last another month or two. Now, if we use Bill Williams' third bar rule, we see that this third bar was actually, when we look at this third bar, the green bar here, we had a big bearish candle, so that's not so important. But the next third bearish candle, or bullish candle, or bullish bar, sorry. Mixing up my words, but that is in fact a bullish candle right here. So we probably have the potential now from a weekly point of view to maybe not retrace all the way to the zero line. I wouldn't expect that far of a retracement because we're still in the wave C. It's still one fluid move down, but we could expect it to go maybe halfway. So we still have definitely some space and time for this to continue with its correction. Looking at how far the histogram bars are to the zero line and that they are green at the moment. They are below the zero line, so obviously certainly we're in a bearish mode on the weekly, but we're retracing at the moment. Anyhow, so that is more details on the higher time frames. Now, looking at the lower time frames. Alrighty. The first break of the 4-hour fractal, I don't want 111.50. 111.50. Let me check where 111.50 is. I think is still a good shorting zone. I'm not sure if price can get that far at the moment though. With the stop loss below the 4-hour top here at 112.40, 112, maybe 50s, 53, is 100 pip stop loss, but should be enough space here to target 109.75, for instance, 109. I would not target the 38.2 fib for the moment, but I, let's say, would be cautious when it does bounce to see how it bounces. If it's showing a lot of strength in its upside momentum, then getting out of the trade upon the dip here, which will happen, some retrace, might make sense because then it could do this. If it's kind of a weak reaction to the 38.2 fib, then we should be set, and we should see another fall, and we can trail stop right away this particular tops. So do you see that game plan? Is that clear? Maybe I'll repeat it one more time. Any short at 110, 111.50 with a stop loss at 112.53 could target with a TP, a hard TP, the 50 or the 61.8 fib, and or use a trail stop. I wouldn't target the 38.2 fib once again because it's close by, and there's a chance we'll just continue through it, either directly or after when we hit it after some kind of bear flag, and then drop. If price does bounce up steeply over the 38.2 fib, then there's still a good chance we'll retrace that upside momentum. And then that's still a chance to exit at market or even pending upon the retracement, after which there is a chance we'll get a follow through. So that's one way for shorting it. Let me now actually take a look at a different template. Now 110.50 might not be realistic. It could happen, I'm not saying, but there's also an okay chance that it might not get there before hitting the 38.2 fib. So the alternative would be to use this Camarilla and wait for price to get back to 112.24, for instance. No, 111, sorry. 111.24. Take the L3 short, basically, and then target the L5 with a target at 110.50 would be about 74 pips, 70 pips, let's say, 110.54, and a stop loss, I would say above the daily pivot, should be okay at around 111.80. 1180. So it's about 80 minus 24 is about 54 pips. So about a 1.5 to 1. Now 54 might seem on the high side, but I think it's you never know exactly how far it retraces, especially from an intraday perspective. Now Nenet would definitely use probably some other tighter stop loss, I think. I'm not sure. Did anyone look at Nenet's recap? What he said as a stop loss, perhaps, or what trade he mentioned on the euro dollar? I mean, a very tight one could be used using this 1 hour candle and the high of that candle, in fact, right? Which is 110.53, for instance. In that case, it would be about a 30 pip stop loss. Alrighty, let's see. I do have the standard AO indeed. Yeah, that's the standard awesome oscillator. You have red instead of green and vice versa. That's strange. I don't don't understand. Well, I guess ultimately it doesn't really matter. I mean, as it's just a question of getting used to, the meaning of the colors. So not a big deal, I guess. I would have to get used to, red being green in this case and green being red. But if it's only the color difference, then it's just a question of getting used to, I think. Now, the alternative to this intraday short would be longs upon the pullback. So we're looking for here, but that could still take a while before that happens. But I wouldn't say that that would happen necessarily today. But eventually, we can see the potential here for. Let me get back maybe to, or let me leave it on for a second here. Okay. Eventually we see, of course, the potential here because the Asset oscillator is pretty strong, but we're tracing back. We're getting close to the zero line. So eventually, when we bottom out here, and we can see this grow again, and we can see retracement here and follow through to the upside, there's going to be a point where we're going to see this probably curve up again. For the moment, we're not there yet. We see actually bullish moving averages on the 4-hour chart, and now they're flat. The price is trying to break below them. So we're getting into a stage where price is potentially breaking below it, right? But we see that we had a strong uptrend. We see that we had a strong oscillator. So when this gets to the zero line, there's that potential for a bounce that might be interesting. All right, so that's, I think, it. I mean, if you're looking for the long, one way you can, of course, keep an eye on is how price responds to the 50 fib. There's nothing necessarily wrong with taking a direct pending order at the 61.8, by the way, in my opinion, because that's already a pretty deep fib, and I think, and therefore, hence, nothing wrong with necessarily a pending order, which, however, would require maybe a stop loss below the 78.6 fib, which is about 125 pips, but it's difficult avoiding a stop loss of anything between 120 pips on a 4-hour chart, especially using pending order at fibs. If you're looking for a tighter stop loss, then looking for some kind of candlestick reaction at the 61.8, helps both using the low of that candle for a tighter stop loss. No problem, Greg. No problem. The accelerator is also interesting, but it would, just kind of crowd my chart a bit too much. But also, all the indicators from Bill Williams are good things. I think that's really it from the euro dollar perspective, and I guess it's about time after about 40 minutes. But if you have any questions, let me know. Otherwise, let's take a look at the pound USD. Now, the pound USD is also showing the same like the euro dollar. In fact, I mean, I will not go through all the price action on all the higher time frames because you're perfectly able to do that yourself, of course, without me showing you. But we have the same on many of these dollar pairs. Strong bullish candle. It is something to be wary about, or to notice and to be cautious about and to be aware of. Let me say it this way, that we could see a follow through of that bullish candle this month. On the weekly, we see a big bearish candle. Could mean a bit of retracement first before moving up, because, and that's interesting, of course, like a jigsaw puzzle. We see a bullish candle on the monthly, but on the weekly we see bullish, and then a big wick and a big pin bar. So what does that mean? On the weekly we can see a downside first, which would be a retracement of the monthly candle, right? Although we expect downside on the weekly, what we could see on the daily is maybe first a retracement of that daily candle before moving down. So what we could see on the daily is perhaps a retracement of that weekly candle wick before moving down. And this is kind of the point I'm trying to make here, is that you kind of see these waves unfolding on all these time frames, and it could be confusing to focus on one and say, okay, I want that wave, or I want that trade, or I want to trade this kind of piece or this part, what I expect. And that could be a bit tricky if you look at all time frames and try to use waves on all time frames. So you want to take it step by step. That's for sure. Oh no, I missed your question, Justina. Sorry about that. And I missed Knut's question too, I see now. Sorry about that. Let's see. Let's see. yeah, NFP will definitely have its effect, and NFP could actually totally invalidate anything I say, and therefore it's always can never be more than, let's say, 80-90%, just because of these factors that with wave analysis could totally flip things around. And I would say that with my wave analysis, I myself think that most of the time it's pretty accurate. Of course, there are some cases where I change things, but it's impossible not to. I think pretty accurate, but obviously there are going to be moments where a news event like that can certainly change the environment, definitely. Actually, it was the NFP, I think it was, or the FOMC, where it I think it was, I know one of these turned, I forgot which one, but the euro dollar ended up, no, that was this day here, this one, right here. This day was a big FOMC or an NFP day. It was one of the reasons also why I thought that the wave 3 could finally end. Typically, wave 3 ends, or big wave decisions are kind of indicated by high volatility days like that, because those are the days that the market can really make a big imprint on the chart. So typically what you'll see is a strong continuation of a wave or an end of a wave on those days, in fact, as there's enough kind of participants to really post something substantial on the chart, and then that's used as a signal for either the correction or impulse or continuation or reversal. Okay, that was FOMC instances. Yeah, so that was already a big day that indicates the potential. And it was on the early side, and I tried to stress that, but it was already kind of the first signal. I also missed Knut's question. Let's see, is an ending diagonal in wave 5? Well, ending diagonals are ones where you, of course, are reaching the top point. Indeed, so this indeed could be one. Typically, the wave 5 is shorter than the wave 3, and the wave 3 is shorter than the wave 1, and it seems to be so, just quickly measured. So yeah, I think that that is an ending diagonal. Totally agree. Good point. Good. Thanks for the reminder. I have to make this chat box a bit bigger. All these chats were scrolling down the question. So back to, let me go to the wave analysis here then for the pound. Oh. And what we see for the pound is perhaps the end of a 5 of 5 of 5 of A, and we're now in a B. And the B, like the euro dollar, quite similar, could be a W, X, Y. And when we broke this bottom, I still held on to the X because sometimes X's can break W's, and that indeed happened. And we got the bigger correction like this. Now we could expand that correction still like this with like the euro dollar. So for the moment, I'm expecting that. So we're getting close to the 50 fib of this upside. So if we put a fib from here to here, we had a lot of bullish days, and we could get a bounce at the 50 or 61.8 fib. So if we look at lower time frames now, what we see is perhaps an ABC here for W, X, and then again perhaps an ABC to finish that X at the 50 or 61.8. So we can see perhaps is like this, up, down, up. So for the moment, the trade ideas that I have in mind are quite similar to the euro dollar, but maybe not a short right in here, but a short upon the pullback. That's one potential there. A long either from the 50 or 61.8. and then shorts again when it gets up to here, and potential longs in between as well, by the way, until we get to that resistance spot. So we'll talk about these potential setups, right? But this is looking at wave analysis and fibs. You can already kind of identify the potential setups and roadmaps that I think are interesting. Shorts till the 50, 60, till the 50 and 61.8, and then longs from those levels, and then again still potential longs upon dips until we hit the resistance, which is then basically the shorting zone. Now, as you can see, this is quite similar to the euro dollar in its potential here, in its movement. And if we put a fib from top to bottom, typically we'll see the fibs aligned. Not so much now, actually. The 61.8 is pretty close to the minus 61.8, but not that close either. Not that much aligned at the moment. Strange, but typically they are. Maybe, let me see. I don't know. Let me check this fib. Let me check one thing here. It could be a B bottom break here, but I don't know. It's maybe pushing it a bit. Anyhow, for the moment, though, the minus 272 target, I would say, is something to aim for at 157.50. And we should also be aware of any of these fibs. This one, if we do it like this, it's the same. Or if we do it like this, which is still 155.70, although we respected that level. So I think this target is taken out for the moment, but still 155.70 and 157.50. I would say those are the main targets to the upside for the moment. Anyhow, going back to lower time frames. So rallies, because we are in a downtrend at the moment, and we broke below the 38.2 fib, I think should be okay with shorts, but we do have a top in here. Big consolidation at the moment. Bullish divergence, Modris is saying on the 1 hour chart. Let's take a look. Bullish divergence in 1 hour AO. You mean between these tops? We don't have bearish divergence indeed. The 30-minute chart is showing divergence between these bottoms here, indeed. But this is only one single divergence. On a 30-minute chart, single divergence is not unimportant, but of course wouldn't mean necessarily a reversal. What we could see is a small rally because of that, indeed. But we don't have to have necessarily a big reversal. Maybe that's what you mean as well, I don't know. But we do see, indeed, some divergence here, although we had a very strong push here. So for the moment, actually, there could be a breakout trade when we push above this top, but I wouldn't be interested in that. This is a 4-hour resistance, and it could actually see a rally here to retest these levels. So there could be some space. So what we find out if we zoom into lower time frames even is that There could be even an upside first before a downside, before upside, before downside again. Right, so this is not to make it complicated or something like that. Sorry about that, but sometimes you kind of find smaller trades within zones when you zoom in. That's my point. Hope that makes sense. Now, if we want to trade that, depends on our tools and indicators, and depends on how likely perhaps you think a trade is to work out. And sometimes it's difficult to assess, and in that case, if it's not a trade that really looks good, just maybe skip it. But maybe still keep an eye on it throughout the day to see and validate how your analysis would have worked out, to either see how you could have done it better, or perhaps to confirm how good it was. And don't get upset if it turned out well, because that just shows progress and shows increases the confidence in one's own analysis. That's nothing wrong. Anyhow, sidetracking a bit here. Personally, I would not want to take a pending order on this particular fib, and I would rather look for some price action confirmation, like a 1 hour wick, for instance, right in here. If it does show that at around 152.75, the target is 149.34, which is a confluence of that minus 618 and 61.8 fib. Stop loss above 154. Then a long could be taken at 149.23 with a tight stop loss below this, 148.50, 148.50. A looser one below 147.50, and an extreme loose one below 145.60, the bottom. That would be a swing trade from the 61.8 fib and the minus 61.8 target. The alternative would be a market order when there's some 4 hour bullish candle. There is, of course, a disadvantage if you wait for a bullish candle, is that you're going to have a bullish candle that is maybe already up in here before it's tradable. And some people don't like that, because then they say, I lost too many pips. But then again, you have a clear level where you can put the stop loss, and if it is the 61.8 bounce, then it should go a lot further than that. So there's still enough potential to the upside, even if you give up 40, 50, 60 pips from that fib. Also, if you do see a big bullish candle at the 61.8 fib, you can always wait for a slight retracement of that candle, although we're getting maybe into a lot of detail here, to get a bit of a discount before taking it along as well. But you might miss the trade. So there are always various ways of getting in, and I don't think there's anything wrong with either way, a market order or a pending order like this. I know that some traders are really big fans of one or the other. I do tend to use more market orders. I don't want to say that pending orders are anything bad with it. I also tend to wait for some smaller type of confirmations on price action, and some don't like that. Some think, as I said, that there's too much space giving away for a trade. But then again, if you wait for a confirmation here, for instance, there's still a lot of pips left, even though you gave away here maybe 70. There was still, okay, this was a lot, but 200 easily, and I went up 460, right? So I don't think that there's anything wrong with that, as long as you're timing it at the right points. Obviously, if you would, for instance, which can always happen, but take along at a breakout where there's multiple divergences, then there's not maybe the right moment. That's my point. But anyhow, different ways of tackling entries, different ways of waiting for a trigger, and it's good to find a trigger and entry that suits you, that you feel comfortable with after a while. And you can use basically wave analysis to identify spots that you find interesting and then set up the triggers. So the wave analysis you can use kind of like a market structure, understanding what's going on, and you can have a rough trade plan or game plan in your mind and use that as a roadmap to zoom in and then kind of like configure and build up a more precise trading plan based on tools and indicators or even just price action. Does anyone have, because I've been talking so much about waves and fibs now. Yes, they are fractals, no problem. The MT4 has them. Go to Insert, Indicators, Bill Williams, and it should be there. All right, so let me know if you can find them. I'll explain a bit about the fractals when we look at the Aussie. Björn is talking about the Aussie, so we can right away combine that. All right, let's take a look at this strength weakness indicator. We see the pound is moving up, and that on the 5-minute chart here, what is this? Yen, pound yen. Let's take a quick look at the pound yen, then that seems to be the strongest pair, and we'll take a look at the Aussie as well. First of all, the Aussie, then maybe. The Aussie, I'm practicing this strategy on mine on this account, and I'm taking a long on the Aussie here. The stop loss below this candle. Break of the fractal, and we had some momentum to the upside. So attempting the long, we talked about the Aussie potential to the upside already in this expanding wedge. We did have eventually the fulfillment of that wedge up until that big daily candle. Now we're seeing a retracement, and we're at a minus 272 target on a lower time frame plus at a 50 fib. So I didn't take the 50 fib, as you can see, and the target, but I did now taking the break basically after the bounce, which to me is looking like a pretty strong bounce. So that was the idea. Now this push-up could still be part of a bigger downside. So a target, for instance, could be the 79.90, which could be almost, in a way, a close and reverse moment, perhaps for this bigger correction like that. Ultimately, I mean, if you look at the Aussie, it's kind of the same situation as the euro and the pound, where we have a big monthly candle and we might see basically some consolidation here, but then eventually I would say upside, just based on that. Yeah, no problem. Yeah, indeed, I can imagine. The fractal is also something from Bill Williams, but not something you would think about directly necessarily if you don't know Bill Williams. Indeed, fractal exists from 70s, I think, and Bill Williams was the one basically who kind of connected to the trading and fractals, I think, in 2 decades later or something like that. So a wave 2, let's see, AUD can be in a wave 2, and if it is in a wave 3, can't be the shortest. So are you a target up to close to 161? Let's see. This to me looks more like an ABC correction, to be honest. But let's measure it. This not probably a wave 4 indeed. If it is, we're already within the wave 1 top, unless this is the wave 1 top. But then if this is wave 1, 2, this could be 1, 2, 3, but then 4 is already back into 3, into 1. You see that? So this could not be 1, 2, and this a lower degree of 1, 2, 3, 4, 5. That can't be 4, 3. That's not possible anymore. I think it's more a correction, considering the bigger, time frame, the fact that we were in a downtrend, that we are kind of having this corrective pattern like this. I would not be looking so much for wave 4s, but more automatically thinking about corrective waves. 4 can go into 1 in a leading diagonal or an ending diagonal, but a leading or ending is always a wave 1 or wave 5. And if this is a wave 4, it would have to be part of a wave 3, because if this is wave 1 and this is wave 2, then all of this is part of wave 3. And we cannot have leading or ending diagonals as part of wave 3. We cannot have wave 4 overlapping with wave 1 as part of wave 3. It could be, and now we're getting into big wave details, it could be 1, 2, 1, 2, 1, 2. We'd have 3 times 1, 2. That is still possible, as long as price stays above this bottom. That could be possible, but that would entail, or that would mean that we're going to have this massive kind of uptrend from here. And considering the weekly chart, I don't think that's probably likely at the moment. Therefore, I would consider this probably more likely to be some kind of correction here, and then this to be a correction like that. And now we're going to probably get a new correction here like this, and then we'll probably get a correction up. It seems to fit more within the current environment. The oscillator on the 4-hour, in any case though, if it is a 1, 2, 1, 2, 1, 2, or if it is a ABC followed by this, or even an ABC followed by this, we are in a bullish bouncing spot probably, or there's a chance that we are. The oscillator is back to the 0 line, it's below the 0 line, and we have 3 green bars here, and a break of the resistance, so we have higher highs here. And the oscillator is kind of retraced and is now heading back up. So let's take a look at the pound yen now. We have a pound news event, but definitely something maybe to keep an eye on. When is the news event? Probably 40 minutes from now, 35 minutes from now. But something definitely to think about is perhaps a breakout to the upside. Let me see here. We are having all the way a dip back here on the 4-hour chart, back to the 0 line. We had a strong trend up. And there could be some space to the upside to retest these tops. I'm not saying we will break that top necessarily, but to retest it. So in that regard, if we break through, let's see, what kind of level would be good? If we break through these highs on the 4-hour chart here, right? This line is connecting these resistance spots. We could have a pretty interesting breakout situation. Stop loss below the bottom, targeting perhaps not the very top, but maybe something like 183.68 there, right? Not to aim for the very last pip. As someone I knew used to say, what is a pip or two among friends, right? So you don't want to aim for the meaning. The idea behind it is meaning that we don't want to aim for the very, very last point. You know, giving a few pips away sometimes is okay. Just to have the trade in the pocket. But in any case, this breakout could be something to look for after the news event. Let me think which way could be the most interesting to trade it. Let's take a look at these 4-hour candles. We got dojis, doji, a lot of indecision candles here. Maybe even just a simple bullish, a decent bullish candle could be already enough, I think. In all honesty, even right now, because we are seeing kind of a stall here, and it's not necessarily bad right at this point. It's just that there is a 1-hour top, but don't see necessarily the need to do that now right in front of a news event, personally. But when we have a 4-hour candle, the news event will be behind us. I think that would make most sense. Or maybe even a strong 1-hour candle pushing above 180, 175. Could be a good swing trade to the upside. What else? Euro New Zealand made a good trade upon the break. We talked about this one. Did anyone take the Euro New Zealand upside? Oh wait, sorry. Multis has a question about odd USD. I'll talk about that in a second. Did anyone take the Euro New Zealand upside? We talked about, or I discussed the fact that if we break this fractal, it could be a good swing trade. And I took that one, and what I did, I put a fib from here to here, representing the swing high, swing low, the bullish swing high, swing low, the bullish momentum, and we had a kind of bull flag that went to the 38.2 fib, and we broke that fractal. We got a continuation of that, and we made a bigger zigzag, as you can see. Right, so you don't even need to know wave counts here on this. If is this a 1? Is this an A? It doesn't matter. If we get a bull flag, there's a chance of a C and 3, and it's a good trade. That's why I took that long, and I closed it at the minus 1,000 target. I let it ride first to see how far it would go, and then eventually decided to close it at minus 1,000, which was about 580 pips. Did anyone join me in that, or at least part of that trade? Great. Beverly took the pound yen. Great job. Let's go back quickly. Pound yen. I think that was that the 15-minute one we discussed? I think so, right? The 15-minute trade where we had a breakout candle somewhere. I think it was going up to 184, 183.90, right? It was here somewhere. I pushed 50 pips, then moved down and then up again. Yeah. Yes. Yeah. Yes, that was nice indeed. Because this is the 30-minute chart. That was it. It seemed so long before it pushed right, but eventually, actually, not even that long after our webinar, it started to push quickly. Then we got a bull flag, and if we use the rule every candle out, then it was about 40 pips every low. Sorry, if we trail stop every low, it was about 40, 30, 37, I think. If some of you maybe managed to survive to this bull flag, then you got one more push indeed to that 180, 30, 90. Great job, Beverly. The settings for the fractal, I just have the standard fractals. I didn't change them here. Otherwise, this week, let's take a quick look. Oh, the odd USD. Wait, I forgot about the odd USD. Let's see. Well, Modus is asking what the long-term effect could be of the cash rate announcement, and there's a bullish candle after the cash rate, and it is true that candlesticks after these big news events kind of are wacky, are looking strange. I'm not a big fan of trading a currency after the news event on that day. So that's just in general. But basically, the odd USD is just a particular strategy I'm testing. The long-term effect, I think, yeah, if you look at the cash rate decrease, you would expect some problems for the Aussie indeed. But still, 2% is still a lot better than the dollar interest rate, so it's difficult to say exactly. It's a more fundamental question, I guess, what the long-term effect could be. You would think that at least the demand will weaken a tad because it is a quarter less, but that's, I guess, very logical to think that. Pound out and euro out are still stuck in consolidations. Big spike up on the euro odd. Let me take a look at other currency pairs that could be a bit more interesting. Pound Swissies are tracing up. Yeah, perhaps that pound yen could be one of the better ones. We see pound strength, the yen weakness. Dollar yen is a bit tricky because it's close to a strong resistance point, I would say. Odd is beating in New Zealand. So perhaps the odd yen could not be that bad either. We do see odd has that interest rate decision today, so it makes it a bit more unpleasant perhaps. But like the odd USD, the odd yen could be maybe interesting too. Yeah, I think that for today, probably the pound strength probably maybe it could be interesting. But we have a news event 27 minutes away from now, so we really have to see how the news event will impact that. Because who knows, it could close and reverse back down to go down to the 50 fib. So it's in that regard, if I just go back to the pound, the news event will tell whether this pushes up and hits the resistance or whether the news event pushes it down and hits the support fib. Last look at this indicator here we have on the 1 hour chart perhaps to see if we have any particular strong or weak indicators, currencies. Dollar strongest at the moment, pound gaining fast, euro falling fast. That does not make much sense though, because let me move to a lower time frame. Pound Swiss, Euro pound seem the best at the moment, according to that indicator. I don't know. It depends. I'm not a big fan of trading the euro pound, but obviously a hook back for more downside could make sense. The oscillator is red, moving down. We broke a 4-hour fractal, so it could be bearish territory here. But I'm not a big fan of the euro pound. The fractal basically is a support and resistance level that is automatically put on the chart, so I don't have to squint my eyes basically to see where those resistance spots are. The fractal is put on the chart as soon as you have a candle high or low that is higher or lower than the candles around it. So with a fractal below the candle, like this one here, that candle low, the low of that candle that has the fractal is lower than 2 candles to the left and 2 candles to the right at minimum. But it can be more. Like this fractal, it has a ton of candles that are higher than its low to the left and to the right. But the minimum is 2. So if a candle doesn't have that, like this candle, doesn't have a fractal on both sides because the low is broken after that and the high was broken before that. And I use it for support and resistance. I use it for breakouts, sometimes even entries, and use it to get an idea about the swings. Yep, sure thing. Does anyone else have a question by any chance? Alrighty. Well, tomorrow we'll take a look more at intraday trading. This webinar was more focused on waves, which tend to go along with bigger time frames, more the market structure, and but I think it was a good moment because anyhow, April just finished, so I think it's good to refresh, take a look at the long term, get an idea about what could happen in this month based on the last month and weeks. You know, to get a bit better idea about that potential. Tomorrow we'll dive into lower time frames a bit more again as we take a look at Forex strategy. And the evening, Nana is going to take a look at commodity channel index and how to use it. And then Nana and I are going to take a look on Thursday evening at using market structure. So that could be interesting if you like this webinar. Perhaps you like that one on Thursday evening too. The awesome oscillator and the 3 bars. Basically what Williams said is, and analyzed, is that if you have a downside or upside if you have a strong AO here, right, you'll see typically one red bar after another. And the moment that he considers kind of the end of the down or upside here is when you have three green or 3 red bars in the opposite direction. So when you have a closed candle that's a green or red, it could be the first moment that that particular momentum is over. So here, that momentum is over here. That's on the early side, looking at price action. But indeed, it did give the accurate prediction of a turnaround. Here, it was here, on the upside. And that's kind of when the upside, the momentum, and the downside momentums are finished. You can use that 3-bar rule. Because if it's 1 or 2, it's still on the early side, it could still turn and switch to the opposite side. Here, for instance, you got 3 red bars. This is the end, but then it still continues. For more upside with this particular case. That can happen sometimes, right? Sometimes it's just a minor retracement. If the pound is strong now, will it continue to be strong throughout the day? It depends on the news event, really. It's positioned in a way it could, but it has space down to the 50 fib too, so it could push through that. It could push to that, and through it to the 61.8. So we'll have to see how the news event handles itself. I didn't know that. I should read about Williams more. Yeah, cool. It's definitely recommended. I would recommend it, definitely. All right, folks. Well, thank you so much for joining me today. I wish you all good trading and hope to see you tomorrow. All right? See you soon. Cheers.